So I've worked with traders for more than 10 years, and I've seen a lot of traders go from consistently losing to break even to slightly profitable to long-term profitable. And what is really surprising is that every stage follows its very own rules, and there are always certain very specific dangers and pitfalls waiting at every stage along the way, that it's really interesting that every trader goes through this same phases. And what is really helpful to know is that there are certain things that you can do and things that you must avoid in order to progress through the next stage. And that's what we're going to do in this video. So in the beginning, everyone is starting at stage 1. It's where you are fresh to trading. And what happens is that unless you get very lucky, you're going to experience a period where you are just losing money. And typically you have a lot of losses. The win rate is fairly low. And you also have a lot of large losses. And that's really the big problem at this stage, is that traders are not aware of position sizing and risk management, and they often blow their accounts. It should be almost impossible mathematically to blow your accounts, especially if you just have 3, 4, 5 trades, and within those 3, 4, 5 trades, you lose your whole account. This is a clear sign that you have no clue about risk management, and that is the big problem here at this stage. Traders are also unaware of the emotional drivers. So maybe they've heard that emotions are a big part of trading, but they don't fully understand the concepts, and by far they have not developed any coping mechanisms. That comes later. They're also not organized, they have no plan, they are always constantly jumping around, there's a lot of noise and inconsistencies. And one of the big problems here is that traders are chasing the holy grail. That's what we call in trading, when you always jump from one strategy to the next one, hoping to find suddenly something that just works from the start. But at this point, traders don't know that this is not the way to go, and this has absolutely nothing to do with how trading works, but it's just a characteristic of this stage. But the biggest danger in my experience is that traders can lose so much money early on that they will quit trading. They completely give up trading because they have destroyed their mental capital. Maybe traders have blown just one too many accounts. They have lost just so much money from their savings that they have had enough. They move on and they will never look at trading again because it just hurt too much and they have no way to recover from this, and they lack the tools. So at this point, it's really important that you get a grasp on risk management, on position sizing. It should be one of the first things that you are practicing in your broker account, how you consistently size your positions with a stop loss that you're risking around 1%, 2%. But try it out on your demo account so that when you take a loss, it's a moderate, small loss that's not going to hurt you. Of course, you also have to understand that you shouldn't chase the holy grail, but this comes a little bit afterwards. It's really about just making sure that you don't blow up and that you slowly start to realize that trading is more than just clicking buy and sell, because that's then what's going to help you move to the next stage where you are then becoming a small break-even trader. Your equity graph at this point still has a lot of ups and downs, and emotions here are a real problem. You now have the understanding how fear, greed, and all of those things can impact your trading, but you don't fully know how to control them. You have periods of very solid performance, so there can be weeks, sometimes even months, where you are making money, but then something comes around which completely throws you off, and then you lose all of your profits within just a few days. I've seen traders wipe out gains of 3 to 4 months in just 2 to 3 trades. There comes a loss, you're not prepared to deal with it emotionally, and then on the next trade you jump in, you do revenge trading, you take another bad loss that you know you should have avoided and you shouldn't even be in that trade, and then you lose your mental game, and on the next trade you oversize so much, you go in all in, that you are then inevitably losing all of your progress. This is really this cycle that a lot of break-even traders will go through. And it's really important at this point that you slowly start to have better coping mechanisms. When you start to feel emotional, You just go away from your screen. You don't let emotions take over. And that is then how you can eventually make the next step towards the next stage 3. But let's spend a few more moments here. And what is really important that at this point, you start to review your trades. A lot of traders will never look at their past trades, and it's one of the biggest mistakes that traders can make. Just look at your last week's trades, and for every trade, ask yourself, what did I do wrong here and what went right? And then you build a catalog over time with all of the mistakes that you make. You bring it to the awareness stage where you see all the mistakes that you keep repeating. And the next step then is that at the beginning of the week or maybe on the weekend, you set one positive impulse. So just pick one thing that on the next week you want to improve. Write it down, put it on a post-it, put it on your screen set so that when you are coming back to your trading desk Monday morning, you will always be reminded of that one thing. And then over time, you can slowly start changing your behavior. One thing at a time will over time make huge positive impacts on your trading. And the biggest danger at this point is system hopping. System hopping means that you have a system, you trade it for maybe a few days, for weeks, and then you have 2 or 3 losing trades and you start doubting the system. You haven't fully understood that trading is a long-term game of probabilities and that losses are absolutely normal. But the traders that will not make it through this stage and maybe even go back to the overwhelmed beginner is those traders that are still system hopping all the time. You have to come to the realization that it's not the system that is the problem, and that's where we come back to the review part. You review your trades, and what you will inevitably notice is that it's not the system that is causing your losses, it's you breaking the rules of your system that is causing the losses. And that is then slowly, hopefully starting to help you make this mental shift where you go away from system hopping and you understand that it's you need to work on. And that is then going to help you make the next stage where slowly your equity graph is going to go slightly into profitable. Of course, sometimes you will dip back, you have small drawdowns, but your equity graph is slowly over a longer period of time moving into the profitable area. And at that point, traders have understood that they need to stop system hopping. They have understood the importance of risk management and position sizing. They have also understood that it's important to review your trades and to constantly work on yourself. And those traders typically then can commit to maybe 1, 2, 3 strategies, just a handful, don't overwhelm yourself. And they're committed to those strategies and they're committed to working on themselves. They have understood by reviewing their trades that they need to be more selective. Your data will always show you that if you take A quality trades and you avoid trades that are outside of the framework of your system, your trading results will improve. That is what your data will show you inevitably. You're also going to feel a lot calmer. You have developed better coping mechanisms when it comes to losing or when you have periods where things are not going according to plan and you have those drawdowns. Your strategies at that point are not fully refined. You start that process at this point where you start to work on better targets, better trade management. At this point, traders have also often realized that it's not about the entry. 90% of the traders that are struggling will never look past their entry of the strategy. They think the whole strategy is the entry. But the traders who are going from break even to slightly profitable have realized that it's not only about the entry, but they start working on other areas and they start looking at ways how they can capture bigger winners. They can look to optimize their reward to risk ratio and all of those other parts of a strategy. The biggest danger at this point is that traders will get impatient. They are profitable, but it's going very, very slow. The equity graph is just starting to slowly move into the top right here. And impatience is here your biggest threat. If you want to speed up the process, meaning more risk management, maybe pushing trades and getting into suboptimal trades, that's going to set you back and it's going to bring you back to the break-even phase. So it's really important at this point that you also look back at your history, at your past. How far have you come? What steps did you make in the break even and in the losing period that helped you to get to this point in your trading? Recognize your progress. It will give you confidence and it will help you understand that you are on the right path. And then eventually you can come to this consistently profitable trader stage. It's the final stage, although caveat, it doesn't end here. Once you're consistently profitable, there's no guarantee that you're going to stay here forever. And I have seen traders who go back from consistently profitable to just slightly profitable and even becoming break-even traders again. If you don't bring your A game day in and day out, there's no guarantee that you will remain profitable. At this point, traders keep working on the edge. Remember, we have started to look beyond the entry and we started to tweak the exits, the take profits, and the trade management. And traders at this point, they're still working tirelessly, and very important that they're curious. They're curious about their strategy and they're curious, how could they improve? How can they push their edge to the next level? Maybe even find new strategies that you can add without overwhelming yourself that could help you build a portfolio of strategies. Emotions at this point are controlled. They don't take over. Of course, occasionally you're human, everything can happen, and occasionally emotions can and probably will take over and will throw you a little bit off. But you have the coping mechanisms, you have the understanding and the knowledge how to deal with that. Also, you're in this process-oriented mindset, not the goal-oriented mindset. A lot of traders in the beginning, they will look at their trades and their results mostly, and they see good trade and they believe good trade or winning trade means good trade, losing trade means bad trade. But traders at this point have realized that it's about long-term, it's probabilities, and they're focusing on execution. Every day you try to bring your A game. You try to trade as perfectly as you can. You try to follow your edge and your routine. And this is another part. Routines are here what separates the long-term profitable trader from a trader that has a chance to go back here and go back to stage number 3 or 2. You have solid routines in place. You have your post-trading, you have your pre-trading routine, you have your weekend review, you have sessions where at the end of every quarter, at every end of every year, you review your performance in depth and then you take adjustments and you take measurements so that you will stay on track. And routines is here really what separates the profitable trader here from the ones that will go back. And the biggest danger, and there are dangers, is that you become complacent and overconfident. We have seen this quite a bit. We have seen traders who trade very profitably and then they believe they don't have to do the work anymore. And then they get sloppy, they get lazy, they don't do their pre-trade check, they don't do the end of week review. And then they will have worse habits and that will drag down their edge. It will drag down their performance. And it's very, very possible that you then make a step backwards, that you have to fight yourself back up to become long-term profitable. So really make sure that you always bring the A game. There's no guarantee once you're profitable that you will stay profitable forever. And that is really the key here at this final stage, to make sure that you stay in this for the long game and that you have a good, profitable trading career ahead of you. Let me know in the comments at which state of this journey you are. Let me also know what are your biggest struggles right now so that I can help you make the step to the next one. I will make videos about your issues that you let me know about in the comments, and I really look forward to hearing from you.